Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Wednesday. It's July 26th. I'm not in my usual office in Ponte Vedra Beach. I am actually in Washington, D.C. Now, it's about 7:42 in the morning. I'm going to be leaving tomorrow morning, so I'm going to do tomorrow's video probably tonight for you guys. But it's about 7:42 in the morning. The market's going to gear up to open up in about an hour and 45 minutes. Before we get started, if you're watching on YouTube, make sure to like our Wealth Press channel, subscribe to our Telegram channel. I give free trades there. And remember, my VIP room has been opened for the summer for free, no cost. Link above or below this video. If you want some freebies, if you want some day trades today, stay till the end. I'll give you some ticker symbols for today, but you got to stay till the end. Make sure to like and subscribe to this video. All right, so the Nasdaq is down quite a bit. The Dow's down 26 points. Most of the downside right now in the market is coming from Microsoft, which is down about 3.35%. Not a good place to be right now. Earnings were not as good as expected. The stock is on the downside, although I got to say Microsoft is a little oversold, and I still believe at this point, where are we right now? Actually, I could just move this trend line. At this point in time, there's a good chance this could be the bottom. Microsoft has been very, very resilient. And you could see right here that if this stock bottoms out around here, this could be a buying opportunity. So don't be shy if Microsoft turns off and then starts rallying towards the end of the day. That could be your opportunity. And remember, there's already a liquidity crush on it because the earnings are already out. So the options should be a lot cheaper. But I wouldn't do anything till the end of today. I want to see it go down a little more and then start rallying towards the end of the day. Now, we haven't seen any intraday action just yet. It's been moving up. It started moving down, and then it's been moving up. Here it is. So as long as it stays positive and closes near the end of today's session. Another stock that came out with earnings, big one that came out with earnings, is Google. Now, Google's actually positive right now quite a bit. This is going to give, so the offset you're going to get from Microsoft is going to be given by Google. So the market shouldn't be reacting too much because one is down and one is up. But we do have Facebook today. We have Meta. Here it is. Meta coming out today. And I'll talk about earnings in a little bit, but we do have Meta coming out with earnings, I think, after the close today. Usually the big text comes out. It's already up 7 points. It already might have come out with earnings. But if I had to bet, I think that earnings on the tech giants are going to be a little better than expected. Let's see if this one's already. Let's look at the key statistics and see if it hit earnings already. Earnings is that's definitely today. Let's look at the news and see if they reported already. No. So earnings on tap. Yeah, it comes out after the closing today. So be careful and watch it carefully. But if you see Microsoft, here's what I'm going to tell you. If you see Microsoft and you see Meta closing near the high, that's a pretty good sign. Keep your eye on Microsoft today. Now, in terms of Fed data, today is a big, big day. Mr. Squirrely Powell is speaking, and you also have new home sales, and you also have mortgage applications. So we have a lot of news today. Now, we already know that the Fed is going to raise rates 1/4 basis point. So the only issue now, really, the only issue on the table right now is what he's going to say on his future statements. So the announcement's not going to have a big move, I don't think, unless something drastic happens, which is not expected by anybody, including the Fed. But in this case, I want to hear what he says after in the conference. I want to see if he talks about door number 1, door number 2, or door number 3. Door number 1 is we're done, we're good, we don't need to do anything, we'll see what happens in the future, we may have to do something. Door number 2 is we don't know, things are still on the fryer, economy's not sizzling yet, we need to take more steps, but we don't know how aggressive we'll be. That's number 2. And door number 3 is inflation's out of control, we got a lot, we have a big job ahead of us. Those are the 3 doors, and the market will react. Keep your eye on the bond market. Now, the bond market has been going down the last couple of days. I thought it was going to overcome the 104 level. It doesn't seem like it wants to do that. Keep an eye on it right now. It is a little oversold right now, and it could move in either direction depending much more based on what he says than what he does, all right? And again, tomorrow, boy, oh boy, you've got durable goods. You've got GDP tomorrow. I mean, talk about a 1-2 punch. International trades and goods and services, jobless claims, which will probably be nothing, and pending home sales. GDP is going to be the big and durable goods. These are going to be the big reports, but GDP, the biggest report of the quarter, is coming tomorrow. And this will have a huge, huge impact on what the Fed does. It would have been much better if we had the other way around, if today was the GDP and tomorrow, but what do I know? Powell must know what the GDP is going to be ahead of time. But you could see here the consensus is very wide, from 0.3 to 2.2. It'll be very nice if it's a nice 1.5, 1.6, nothing exciting, but we don't know if that will happen. Now, something to pay attention to. This is my short term. I've created a short-term sector index, and I kind of want to show you where things are. This is 1 week, this is 3 weeks, and this is 6 weeks. And right now for sectors, that's what I want to see, where things are hitting. So you could see here energy, utilities, healthcare, consumer staples, material, real estate, blue chips, and then look at the Dow. So the fact that most of the blue chip stocks, or at least half the blue chip stocks, more than half the blue chip stocks are outperforming the Dow means money's coming into blue chips. Financials, not so much. S&P, not so much. Remember, it has tech in it, where the Dow doesn't have much tech. Small caps are cooling off. Industrial's not doing that great. Then you have the mid caps, and then you have QQQ, technology, communication services, and discretionary. So over the last 5 trading sessions, discretionary communication tech basically has been doing crap, and mid caps and small caps have been doing and blue chips. Now let's look at it over the last 3 weeks. Over the last 3 weeks, mid caps haven't been doing bad. Energy, financial, utilities. So over the last 3 weeks, you have energy and utilities in the same spot, and financials have. Let's see where the financials are. Financials are right here. So financials are actually coming off right now, while energies and utilities and healthcare and consumer staples are getting it on. And in the 3-month basis, you've got energy, financials, utilities. This is where you should be right now. And healthcare and mid-caps. So again, you could see here over the last week, we've been getting a sell-off in most of the tech stocks, the mid-cap stocks, and the small-cap stocks, especially tech. I mean, look at tech, communication, consumer discretionary, but industrial's pretty much same spot, not really been hot. Material hasn't been that hot. Energy, financial, utilities, mostly utilities and energies, they have been doing really, really well. Healthcare has been doing well, but mid-caps have been going down. So you could see here in over 6 weeks, it's a very different story. Basic materials, small caps, technology, look at technology, and look at the blue chips. So you could see here over the last 6 weeks, we've had a shift from technology and small caps and mid caps to energy, utilities, healthcare, consumer staples, material, blue chip stocks at the expense of tech stocks. So this is very useful to see where money is coming from and where it's going over the last 1 week, 6 week, and 3 weeks. I thought that you guys would find it very, very helpful. Now, let's talk a little bit about Fed data and what we could be expecting, right? Because there's a lot of things on the table. Now, I gave you the big picture, but let's kind of just hone in a little bit. We're all looking for Squirrely to tell us what he's anticipating. S&P's now at a 15.5-month high. Blue chips at a 17.5-month high. Remember I told you that blue chips were going to overcome the broad market? Because remember, the S&P has half of tech in it. So it's going to be pulled back by tech. You got to listen to Uncle Rogers sometimes. Economic data Tuesday showed that consumer confidence rose to a 2-year high. While technology is going down and blue chips are going up, I would take that with a grain of salt. Our international monetary policy is forecasting 3% from an April projection of 2.8%. Good luck with that. We'll see if that happens. Earnings on Google were good. Earnings on Apple were bad. And today we've got Meta on the table. You've got Coca-Cola, Union Pacific, AT&T, and Boeing. It's called the mishpucha in Hebrew or in Yiddish. It means everything at once. We have a 98.9% of a chance that the Fed is going to raise rates. Their insight into future outlook for interest rates is what everybody's closely looking at, as I mentioned before. You also have building permits. I think it's good to kind of go through my analysis and then go through this one because it kind of reinforces it for you. You got crude oil inventories, you got new home sales, and in Europe, consumer staples and mining stocks are taking it under the chin. They've been doing that for quite some time. China has been just kind of some profits, a little rally, but the optimism over measures is being waned, and that's not good for stocks that rely on China, U.S. stocks that rely on China. Excuse me. In terms of Japan, Japan is flatlining. Bank of Japan is leaning towards maintaining its yield control policy unchanged. I thought by now they would start raising rates. They haven't started doing that just yet. Dish, keep your eye on Dish. It's up 14%. Maybe a good time to start looking to sell it again. They're looking they'll start selling its Boost Infinite mobile service on Amazon. Folks, I thought Dish was a cable television company. Am I confused? I mean, like cable TV, internet cable TV, Dish. When they start changing their business model and going into something that has been around forever, let me just show you the chart on Dish. And again, keep your eye on the bond market today. If it goes above that 103 level, we can have a breakout. Otherwise, no soup. Now, this is Dish. It looks like it's turning around. Now, do I believe this is a real turnaround? Oh, boy. I'm waiting to sell this thing. I'd love to see it go a little higher, but I told you guys, wait for Dish to go higher, and we'll sell the living you-know-what out of it. Let's go back to what we were talking about. Earnings today. I mean, I don't want to even start naming them. I mean, look at this. What is not reporting today? That's the big question on the table. What is not reporting today? Now, you're going to keep your eye on the chip stocks. You're going to keep your eye on Microsoft and Google and Meta towards the end of the day. Now, some stocks that I'm really liking right now. I like IBM. I do like IBM because remember, IBM, it is a tech stock, but it's not one of those 7. It's more of a blue chip. It's a blue chip tech stock. I like IBM. Remember, I don't know when earnings are, so be careful. Earnings could be, let's see when earnings are. Let's take a look. When earnings are 7/19. So earnings already happened. It's already behind us. Good. So I like IBM. I really do like IBM. I like where it's going right now. It doesn't have any major resistance till the 147 level, and I like this rally. And I also like Schlumberger. I like the energy stocks right now. I really do. I think they can break out higher, and they've been doing really good. The fact is they're near swing highs right now, and that means there's no overhead resistance. I like this baby triangle with this lizard pattern that's building here. I think we can go higher on Schlumberger and other energy stocks. Matter of fact, if you look at the energy sector, it's looking pretty good as well. It's not looking bad at all. Looks like it can go higher. But I like that stock because it's really breaking out. I also like Caesar because it's not following Win. Look at Win right now. Win has a lot of exposure to China. And it looks like it's consolidating and it's going to come back up. But I like Caesars better because Caesars is already up there. It didn't have this downside move, and there's really not much right now. Let me look. This is a 2-year chart. Look at where we're at right now. It looks like we're going to come back up. Be careful, but if we come above these levels, we already broke higher. We're already above these levels. We already broke out. So I think we're going to go up. There's really nothing here till 80. Again, give it some chance, but I think there's something good there. Now, what about stocks to sell? Well, this one right here, EPM Systems, just made a 90-day low, 10-day high. It's already coming down. I think it's going to come down all the way to the 200 level. And obviously, my favorite stock, which is Dish, but Dish is not ready yet. I want to see it top out, and once it tops out, I want to see it start moving a little lower. We're not there yet, but Dish, keep an eye on Dish. But meanwhile, this EPM stock is the one that you want to sell. Now, folks, I gave you more than one trade today. I gave you several trades today. In terms of small cap stocks, let me see what I've got for you here. I'll pick one for you right now. Let me give you a good one. I could already tell you what they are just by looking at this pre-market sheet. Yeah, I could tell you what they are right now. Let me write it down here for myself. It's WRNT and CMO. Definitely CMO. WRNT and CMO. All right. So these are the ones you want to look at today. WRNT and CMO. Why? Because the volume pre-open is extremely high and it's up quite a bit right now. I just wanted to give it. Now, remember, SEMO has earnings today, so you got to be careful. But WRNT does not. Now, before I let you guys go, first of all, happy hump day. And get ready for something that me and someone else has been working on all week. Now, today at 1 p.m. Eastern Time, I'm sitting down with my really good friend T-Buzz. That's right. You know Tom Busby. He's a legendary trader in his own right. I should have brought my DTI hat. I love those DTI hats. They're the best. They look so good. My wife wears them too. And I'm going to grill him for the full rundown on his weekend side hustle strategy. I'll find out how he's targeting extra income while the market is closed. Ooh, this is going to be good. How this opportunity is available weekend after weekend, and how I can place my first weekend side hustle trade. No stone will be unturned. I like this. Click the link below. Save your seat. It's happening at 1 p.m. today. And remember, my VIP room is free, and we'll post that link there as well, and we'll take you straight from the VIP room into that class. I'll talk to you guys later. Have a great day. Remember, like the YouTube Wealth Press channel, subscribe to the channel, subscribe to my Telegram channel, and most importantly, show up to my VIP room at noon Eastern Time today. Link is above or below this video. If you don't have it, send me an email, support@marketgeeks.com. Bye, and have a great day tuning out from Washington, D.C.